take it from there. Okay, that's recording started, so I'm just gonna start talking. I'll check back to chat. Check back to chat now and then. Yeah. So I'll just get it started from here. Okay, so I'll start with Bitcoin and we'll work our way out. Okay, so nothing's changed for Bitcoin. I know I didn't stream last week, but even the stream we did the week before that, right? The things we talked about, nothing's changed, right? So we were here the week before I streamed, so I couldn't do last week. We were over here the week before that. The harmonics that I gave in my channel a while ago, if I can put those up, is it group 3? No, one sec. This one here. Okay. So up until now, the bearish structures, or rather the levels where you would anticipate bearish price action, have been these, right? So the first one that hit were these ones. Those give you really nice scalp opportunities to the downside, right? To flip the key levels, yearly key levels based off the 2024 close that we had. And eventually, what did we do? We got above this. You're not going to blindly short. As soon as you get above this, that's it. This level's done. You're now looking for the next one. There was the next one. That was this cluster right over here. Again, when we went there, did we distribute? And the answer is no, we didn't. Not really, right? You got lower time frame on the 15 minutes or something like this. If you're scalping, you got lower time frame divergences stacking up, which gave you a move down. But again, what did that move down do? In the same way that the previous PRZ flipped your 2024 yearly high, yearly seller zone, macro read buy zone high, sorry, into support. This distributive structure flipped your 2024 12-month seller zone mid into support. So literally the area, where if you look at 2024, the area where sellers were inactive, right, by the time 2024 closed, you've come and said that now buyers are taking control of an area where previously sellers were the ones taking control, right? All through 2024, when 2024 closed, sellers are the ones that demonstrated their control in this area. But now buyers have come and flipped that and said, no, we are now doing that. And that low didn't get challenged, right? After that, just again, around your next PRZ is what you just chopped around. Flip PRZ into support, 1.13 into support, right? Then you flip 2.24 into support, and that broke you out into new all-time high. So all these bearish harmonics for now, not invalidated, right? Well, I mean, the ones lower down here, they definitely are, but these ones aren't. Not invalidated. For now, you can think of this like an extension, right? If they ever come and distribute on the macro around these levels, they can still give you targets. But the only ones that are now valid, right, is not even these. The only harmonic you now have that is valid is this extension up to 1.13. So that is going to be the next area where you're going to be looking for reactions. Do sellers show strength? Do you see distributive structure? If yes, you attempt to short. You don't have to go all in on a short thinking the market top is in straight away, but you can look for some scalp to swing opportunities. Then if the scalp to swing works out and trend is broken, then you can size up to a proper swing and work even lower. But what we're doing right now, in my opinion, is very, very good. Right? We've literally, right now as we speak, I can't talk about what's going to happen in 3 days time, but right now as we speak, we are currently consolidating above, right? If I look to the daily, anything like this, we're consolidating above 2024 all-time high. Okay, the all-time high you put in 2024, 108,287. You are currently above that. The wick up that you got in 2025, you are also currently above that. Right? The only thing you are now currently below is the high that you went and put in on the 22nd of May. Okay, so yes, some people might going to be saying we're extended, right? But just understand how bull markets work, how momentum and trends work. You can be extended for a very, very long time, right? RSI can go, and right now RSI isn't even in like the full-blown bullish control zone. It's not, right? You're chopping around the top for now. Even once you go to like, this is the full extension, right? Full on bullish control. You can stay here and price can, you can just stay here for a while and price can explode up while that's staying over here, right? So once you go into a full-blown parabolic move, overextension doesn't really stand for much, right? Now, what I would like to point out is on things like the 4 hours, right? So on and so forth, you do have higher highs in price and you did have lower high in RSI, so on and so forth. That gave you this little dump, right? You had some bearish divergence. But again, when your trend is strong, right? When you're on the weekly uptrend, you're in price discovery on the monthly, so on and so forth, on the quarterly, on the triannual, 4 hour bearish divergences aren't your go-to indication, let's say, of where the market's going to be headed. For a medium time frame, lower time frame, sure, it can yield something, but you're not going to pivot your entire portfolio around the data points you're going to get off like the 4 hours. Right, so right now we're chopping up. If you go and distribute around this level, you go except back below 108,287, you have a chance once again to put in some sort of distribution, right? Inverted smileys, that can give you a nice move down. Perhaps you go and take out all of these wicks now, right? So all of these are now liquidity. You can think of these like liquidity to be taken out, right? Perhaps you go and you get that level over there. Perhaps if you do have a local top over here, right, and we get some sort of dump going into, like, let's say June, right? Maybe we have a choppy June. In that case, we could very well have a bigger pullback. I would love to see, like I said, the spicy zone has changed a bit, right? Because of how much higher we've gone. So right now, the support area for me is between somewhere around, let's say, 95.69 and 88.711. But this is an extreme pullback for me now, right? An extreme pullback. We are lucky if we get this. Okay, if anyone's sidelined, like, you would be an extremely lucky person if you got this dump and you got this sort of like, head and shoulder structure, like a cumulative structure print, basically. That would send us higher, right? If it was to be maintained and hold. But, we could just come down, we could just take out these people and then just send it from there, right? And that's if. I'm saying if because there's pullbacks aren't guaranteed, right? If they decide, what this is, we're just going to send it up, we can go and take this out before we get any sort of pullbacks. We just don't know. We're just going to have to see what comes first, right? And if your point of interest at either extreme is taken, that's where you enter the trade. You're not going to enter a blind trade in the middle of nowhere. But Bitcoin, what can I say? It looks it looks very, very strong. Like very, 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 very strong. Just want to emphasize the very. And do we have any other targets? Of course, if I was to switch over here, 1 second, let me just do this. If you go over to this chart, then some higher targets I've got for Bitcoin is right over here, right? So currently we are trying to get above the ABCD 2.618, which we haven't done yet, right? If we ever get a weekly close above the ABCD 2.618, that would be so bullish. Just remember this level, 109,806. Now, it might be slightly different depending on what exchange you use. This one I put on the index chart. But even on whatever exchange you're using, Binance, Bybit, right? If we go and close above the ABCD 2.618, especially like market wide, then there's not much stopping us from just absolutely exploding to the upside, in my opinion. We've got remember the reciprocal ratios for ABCDs. If you get a 382 retracement, you're saying the extensions you're looking for are based on Fibonacci 2.24, which was the first target. We hit that. 2.618, which is the second target. We've now officially hit that. After that is pi, right? 3.14, which is at 121,413 on the index chart, right? And if you get above that, then it's the 3.618. That's your far extension, 132,063. If you get above that, then we have this wave structure right here, ABC. It's not quite a 382, but very, very close. I'm going to treat it like a 382 for now. 2.24 is 152k, 650. 2.618 is at 165k, 829. Every single time I point these out, many people think it's just lines. I'm putting down random shapes and lines, but over the years, how often have I put these down? How often have they been hit? Right? Remember Total 1. When I give you guys the targets on Total 1, okay, if we go to master list here, Total 1 was the exact same thing. Right? If I was to turn these off once, and I put in these, remember, when I first gave these out, it would have just seemed like random lines on a screen, random arrows, but that is exactly where we went to point top out, right? And it gave these targets months ahead before we even got there. So wave structures are very powerful. It might just look like random scribble on a screen when I'm showing it now, but it has an uncanny ability. You look at it months down the line and you realize, oh, well, that's where we ended up going, right? So for now, Total 1 is still below that, ABCD 2.0, 1.272. That's still going to be resistance for us. So it'll be interesting to see what kind of reaction we get once we hit that level. We do have a, one sec, this here. So maybe we get something like this, right? If you want a choppy June, you're going to want to see something like that. Again, if you get that, I think that'd be very, very powerful. But I don't know if we get it, right? It's just an idea for now. But if we get above this, of course, we know we've got targets higher, right? So we've got these. If I turn this off, so all of these off here, the main one we're looking at is this one, of course, right? XAB, very close to an 886, 0.5 on the retracement. Therefore, this is the perfect makings of a deep crab. If you're into your harmonics, you're looking for that 1.618 projection. Right, so 4.36 trillion to 4.51 trillion. We can't be surprised if we do break out of this, right? And we break out of that ABCD. We can't be surprised if that's where we go next. We just can't, because once you're in price discovery, wave structures and Fibonacci, they're the two most powerful forms of TA you have to figure out where my price go to before a potential level is hit, where sellers or market participants rather might view it as an area of interest, and then price action formulates around that, right? But yeah, total 1 looks beautiful. Bitcoin looks beautiful. What about total 2? Have you broken above? No, still underneath here, right? Which puts ETH in a very precarious situation, because now if total 1 does give us that big pullback, there is no way total 2 is going to be the one that, I'm not going to say there's no way, but I would be very surprised if total 2 is then the one that just randomly spikes up, right? So again, if we do get that pullback on total 1 and Bitcoin, then I wouldn't be surprised if this gave us like a move down as well, right? And if we did get all the way down over here on total 1, I would think that total 2 would give you a rate of those lows, but we'll have to see, right? A rate of the lows is what I would want. Doesn't mean it's what we're going to get, but I'm just letting you guys know what I would want to see, right? Is the rate of the lows on total 2, but we're still sat at that resistance area on total 2. Total 3 looks way better than total 2, currently at your yearly levels, right? So 2024 and 2022 yearly levels here, you're rejecting off it. However, you are above this. That was the thing we had to get above. You're above that now. So now it's just a matter of like grinding up, really. That's it. Buyers need to put a shift in, right? That's it. Total 3 definitely looks better than total 2 though, in my opinion. Others looks good. You've got ABCDs taking you higher. 618 to the 1.618, 886 to the 1.13. If you get above that, you've got it's not an 886 exactly, but very close. I'm just going to treat it like an 886. 886 to the 1.13 on the macro. Total 3, the line was held, right? You can very easily visualize the line if you just do this. That was respected. So, others, i.e. your altcoins, it looks ready, right? You just need to flip out and break this. If you do that, altcoins look ready to go. So any pullbacks is a blessing. You look at this chart, you don't look at this and think, oh, it's going to crash at any time. That is unwarranted thesis. That is unwarranted thesis. If you look at this chart and think, oh, we look ready to go lower, I would ask why, right? What about this chart would make you think you should be completely sidelined right now with no exposure, right? So if you have been sidelined this whole time, hopefully you get blessed with the pullback. I would love a pullback. The profits we've taken, would love to like throw that back in at a discount rather than just at like a 20% drop, like maybe a bit deeper, 20-30% drops across the board on all coins. One final flush would be amazing. I don't know if we get it or not, but these, this is going to start gravitating towards here. And one thing about TA is this, right? People will look at these candles, it won't be very volatile. You'll be at a sense of security, be like, okay, we're not really moving yet, I'll give it some time. But it doesn't take much, right? It doesn't take much for the fuck you candles to start coming in. Okay, so you do not plan and you don't enter trades once things go parabolic. Okay, we talk about this all the time here. You don't do that. So if you see a good buying opportunity, especially if we are blessed with a pullback, in my opinion, if you get one more pullback, right now my bias is that's going to be the one that you that you long, that you bid. If you're sidelined, right? If you're still sidelined, that's what you're hoping for. Otherwise, it's going to be very hard for you at current prices to size up heavily. Right, sizing up heavily is going to be very, very difficult if you've not bid anything when we did have the dump and we were talking about all the different coins, right? But hopefully we do get that pullback. If everyone is still if there's anyone still sidelined, I would hate for things to have just rallied from here and you are literally left holding a USDT bag with no exposure whatsoever, and then you start jumping in once everything's popped off like 2x, 3x's. But This is others. Quickly, let's take a look. DeFi looks absolutely amazing. Tell me that doesn't look good. Total DeFi looks beautiful. This looks gorgeous. Downright tantalizing. This is, oh, I don't know what to say. This is so nice, right? Another reason why I keep saying having a 1 or 2 DeFi coins in your portfolio right now would not be a bad idea whatsoever. You've got Tau. I'm still going to stand by Cetus for now, okay? But that's because I've got the room to do so. I've got my, like I said, the average we talked about 0.08 cents, right? That was the macro bad entry that we got a tin at. It's nowhere near that level yet. There's other things if you want more established ones like Uni, right? I will say GMX, right? I think that's going to be a sleeper. There's a few DeFi coins. You can go on. What you can do is, if you want to know all the different DeFi coins, you want to just look through all of them. If you go on CoinMarketCap, right? If you go on CoinMarketCap, they've got pre-made lists, right? So you can filter by type, right? Do you want things underneath AVAX? Do you want things underneath this? Do you want like DeFi coins? Do you want RWA coins? Do you want gaming projects, so on and so forth? Just go in the DeFi, see what looks good, and then just choose 1 or 2 that you look, or 1 or 2 depending on how much you want to allocate to DeFi. 1 or 2 you like the look of, and just get into those, right, in a risk managed way. That's it. You don't need to overcomplicate it. Just honestly, I would recommend a bigger market cap DeFi as well. Don't go for some random shitcoin DeFi that's like 5,000th in like global rankings, right? Yeah, it might go up, or it might just go completely unnoticed. If you're gonna gamble on those, unless you've already made it, you wouldn't put much size into it. Okay. So DeFi looks amazing. What else do we have here? That is total DeFi dominance, right? If it holds this box, that's ready to go. So under the confluence for DeFi. And then there's others dominance, right? Still consolidating within this zone. If you ever lose 7.66%, like we talked about this zone, right? Basically 7.71, this low at 7.6. If you ever lose that, I do honestly think you're going to go down towards like 6.5. Like we've always been talking about. The only thing propping you up is the completion of a wave structure, 786, 1.272, right? But as long as this doesn't get lost, right? As long as this isn't lost, what you're looking for here on others dominance is a reclaim. That's what you really want to see. Get that reclaim and then just attack the top side of the range again. Take all of this liquidity out, right? And then that would be akin to, by the time that happens, any altcoins you're positioned in will have rallied very, very nicely, right? So that's something you'd be looking at. But those are the totals. What about USDT dominance at? Ooh, it's so the harmonic, the bearish, in this case the bearish bat, right? The bearish bat. The T2 of it, you're at the terminal 2 of the said bearish bat, and you are currently below the 618, right? So again, if you cannot get above this, and you do go and turn this into resistance, that is what you're looking for total for USDT dominance to come down. If USDT dominance comes down, what does that mean? It means that the amount of liquidity locked in stablecoins is decreasing, right? So either everyone is literally fleeing crypto as a whole, or that money is now being spent, right? And that's what you want to see. You don't want people holding on to their USDT. You want people spending that USDT to prop up support, to take supply off the market, to buy coins, right? Because ultimately that's what you need. That's the fuel you need to push the prices higher. Okay, so again, if we turn the blue line into resistance, remember the same level we've been looking at for years now. Ever since I joined Unity, we've been talking about this particular line. It's the same level, right? We're back at the area now. We're attempting to turn it to resistance. We just need that confirmation. That's it. But if that happens, just take it down. Primary projections are 2.14% for this bearish harmonic, right? So we'll see what results yield from that. But what you don't want to see is, right, you're going to be very careful if you go and flip this back into support. Again, if that happens, you're saying we could run the highs again, right? Like maybe take out that supply line. If you flip it, go finally tap that blue box before a collapse perhaps, right? Just some more fuckery. But as long as we're below this, you're going to be thinking along the lines of let's go down rather than let's reclaim, right? Once you get the reclaim, you can once again play a bit safer. But if you do turn this into resistance, then the next logical move based off that is going to be a drop, i.e. that's going to lead to a market-wide explosion up in price, not down. Remember, it's inversely correlated, right? But yeah, many things are propped up very very nicely, right? So we've looked at Bitcoin. Those are my thoughts on Bitcoin. Hang on, right over here. If we take a look at order flow, 1 second. Let me switch this to normal view once, so I can use the higher time frame a bit better. There we go. If we take a look, we have absorption going on. That was seller absorption, which is what's leading us a bit higher. Even right now, the candle we're forming right now is seller absorption, but we have 9 hours and 42 minutes for this daily to close. So this data is not final. I want to see the weekly close, right? Based on the last weekly close, yeah, there's nothing bearish. There's no buyer absorption or anything like that going on. You closed above your point of control. You closed within your value area. You closed aggressively buying, and the candle supports that, right? It's not like you have a massive red candle. It's not like you have a massive SFP from the top side. The most amount of buying didn't occur at the top. It occurred in the mid, i.e. in your fair value. So there's nothing bearish about the way this candle looks in terms of aggressive buying versus aggressive selling, right? So the footprint charts, there's nothing in the footprint charts that would lead me to say, oh, this looks a bit like, you know, buyers are being absorbed. We look a bit, this looks like a bit like absorption distribution on the seller side. Nothing like that going on here. We're gonna have a monthly close soon as well. Of course, we have how many days? We have 4 days until monthly close. Monthly close is going to be absolutely beautiful. That is not a bearish monthly candle whatsoever. You want to see a bearish monthly candle? This is what you're looking for. Okay, look, massive buyer. We said this is massive buyer absorption, right? What do you have? A total of 1.02 million in volume, right? With the edge being on the buyer side, right? It's green. The total delta is green by 1,150, meaning that there was that much more on the buyer side than on the seller side, meaning there were more aggressive buyers than sellers, right? If you're thinking in terms of leverage, there was more aggressive longs than aggressive shorts. If you're thinking in terms of spot, there were more aggressive buys than aggressive sells, right? However, does the candle reflect that? And the answer is not at all, right? Even though we're saying there's this much aggressive buyers, if we're saying aggressive buyers are winning out, we should be closing how we're seeing the candle right now. But that's not how we closed, right? We closed with a massive SFP. We closed below your point of control. You closed way below your value area high, right? What this is indicative of is, this is indicative of the fact that all of these aggressive buying was absorbed. Okay, remember, for every buyer there has to be a seller. So when you hit market long, you're going to match up with a limit sell, right? Or rather, in this case, a limit short. A market long matches up with a limit short. A market short matches up with a limit long. For every buyer there has to be a seller. It's a two-way auction. Right, that's what we say. It's a two-way auction. That's what the markets are. So what we're saying here is the aggressive buyers could not overwhelm the passive sellers, right? At all. The sell wall was too great. So the aggressive buyers kept trying to chip away. They kept trying to chip away at that, you know, the sell wall. They just couldn't get anywhere. The sell wall was too great. It was too strong, right? So once all that buying dies out, because aggressive buying cannot keep up. It cannot, right? The markets don't work that way. You can't just have someone going to hit market long all the time, right? Eventually, they are going to run out of gas. Let's say run out of steam, right? Once the aggressive buying subsides, and you notice that, okay, well, there's still this massive fucking sell wall left. What's going to happen? Well, after that, price is obviously going to dump, because the attempt at value, right? The attempt from the buyers to actually push through wasn't rewarded. The supply overhang wasn't beaten. So when market participants now see that, are you going to now jump in and say, I'm going to try my shot at along as well? You're not going to do that, right? So after that, that typically leads to the big flushes that you see to the downside. We do not, that is a sign of buyer absorption. That is what you do not want to see if you want price to continue going up higher. We do not have anything like that right now. Okay, this is an extremely bullish candle. I repeat, extremely bullish candle, even in terms of order flow, right? You're way above your point of control. You're literally just rejecting off your the highest point you've got right now, but that's not a rejection. We don't call this a rejection. We're just saying, like, you know, that's the highest we've reached. You're just having a little retracement right now, right? Not a rejection. You know, your value areas at the top of the candle, meaning most your trading has happened on the top half of the candle, not the bottom, right? For me, 68% of all tradings happen within this range. Again, not at the lows, but at the highs. That shows people are very, very bullish, right? And right now, all of this is above the previous high. So if you close the month in 4 days and 10 hours time above this, sure, you might get a pullback at the next month open. That's typically normal, but you would then look for example, your value area low, your point of control, so on and so forth, to provide support for you to now just, trampoline up higher, basically, right? So, this looks amazing, even in terms of monthly, right? This looks really, really good. We know the last 4-month close was, there wasn't anything overly bullish about the close, but it was more bullish than bearish in the sense that, again, look, we had 3.31 million total volume when last triennial close happened, right? When April closed out and May opened up. But if you look at the actual buying versus selling that took place, right? We have 3.31 million total volume. We have 47,890 of that on the seller side. Okay, so we have more aggressive selling than buying now. So market shorts, market sells there was more volume in that regard in terms of market sells than there were market buys, market longs. So obviously in terms of aggressive trading, it was very much skewed towards downside. But again, look at the candle close. By the time you closed all the way up over here. You closed above your point of control, you closed within your value area, and you closed way above your value area high, just below your value area low. So that means all the people that were market shorting here were caught offside. They were absorbed. We have seller absorption now, right? So this reaction we get, we identified this in the stream as soon as April closed, right? We talked about this early on. So now we cannot be surprised because look, you did not ever break below your point of control. So we can't be surprised that you have now gone to the top side. We can't, right? So next is going to be, so the important thing that's going to happen is a monthly close. We don't have a 2-month close coming up. That's going to be in June. We don't have a 3-month close coming up. That's going to be in that's going to be the same time. Obviously we don't have a 4 months. We will have a 6 months in a month as well. So the high time frame close that is coming up is a monthly, right? So we'll see how the monthly closes now in 4 days. If you close below 109 and we see huge aggressive buying happen before that happens, right? But then we end up closing with the S&P within 4 days time, then the candle might look completely different. But as we're looking at it live right now, right? My analysis right now looking at this is, there is no way you'd be trying to fade this candle randomly. You wouldn't, right? This is way too strong. You're asking to get stopped out. You're asking to get your back blown out if you do that. So, just don't be shorting with everything you have for no reason whatsoever, right? Lower time frame scalps, you might get a really nice RR opportunity. That is different, but you're not going to be pivoting to some sort of swing short here, thinking you've caught the top of the market. We're going to deviate, because people think along those lines, right? Some people who can't adapt to the market, they'll be very much one-sided focus. There's no weakness here, right? The main takeaway here from now is there is absolutely no weakness right now on the Bitcoin chart based off the orders that have been executed and based off just even traditional TA. There is no weakness to be seen right now. So Bitcoin, let's take a look now at Ethereum. Let's look at a few other things, right? So let's look at in terms of diagonals as well. Actually, it's been a while since I've done that with you guys. So if you look at this in terms of diagonals, let's look at it. Okay, let's do this bit by bit actually, so you guys don't get scared. First of all, the current fib channel, right? The current fib channel on the macro is from the last completed wave structure. We have this. That's the fib channel. If I was to put that on, let me turn this off and let me turn this off too. We'll do it just purely in terms of diagonals for now. The current the macro fib channel right now looks like this. We are rejecting off the 1.5, right? The reason we topped out where we did, it was the 1.5 there. Again, 1.5 rejection there. We went to the liquidity rate of the range extreme for the low, but if you get above here, you have more clearance for up. Now in terms of key levels, you do have diagonals above you, right? I like to consider the diagonals too, because they give you perspective the horizontal levels don't, right? So whereas in terms of horizontals, we are above previous all-time high. In terms of diagonals, we are not. In terms of diagonals, our previous all-time high is the 1.5. We are still rejecting off it. Okay, so if you cannot get above this 1.5, I would not be surprised if we did get some type of pullback. Okay, that's one. Now we can look at it in terms of other diagonals too. So if you look at it in terms of this is from this to this, this to this, right? So you have a really nice diagonal over here. This is completely valid, right? This is one of the early ones I had down. For example, the bottom, the bear market bottom was literally just the 1.618, right? It was the primary projection of this parallel channel. Right now, again, that low that we got, simply the 0.5 retest, right? That wick down. And right now, again, the area we've been rejecting off, we can't close above, is the 382, right? That's a golden pocket, 382, and the liquidity rate of the 382, in the 40% range, we can't get above that. So now there's a completely different diagonal. However, in terms of fib ratios, we're still not closing above, right? So we have another reason now to be a bit careful here in terms of if you do see weakness, if you're ever able to see like 15-minute distribution, hourly distribution, so on and so forth, then you have a good opportunity to hedge short. Okay, not swing short, hedge short, two completely different things. Now, things that you guys will be used to, 50 resistance fan. Okay, the first one is from this low to the high. If you do that, we flip the 0.618, which is right over here into support. So we'll be going for the 0.586 next, right, which is all the way there at the top. Hang on, let me just zoom in. The 586 is here, the 618 is here. So sorry, we flipped the 0.66 into support, the 618 is higher. So in terms of this, right, so if you can get above those diagonals, right, that we just looked at, then these diagonals will be the ones where you have to pay attention next. Because again, now this has very strong historical significance, as you can see. This range, the reason we're in this range is because this is the exact range we were in the past. We've already, if you're new to my streams, you won't be used to this. If you are already here, if you visit my streams regularly, you will be used to this. But in terms of horizontal levels, if you look to the left, sure, we are in price discovery. We don't have historical context, right? But that's only if you consider strictly horizontal levels. There is no support resistance here because you're in a new place. But if you consider now trend over time, i.e. diagonals, you have historical you do have historical price action here, right? The historical price action is literally this range between the 618 and the 702707. You're saying anytime you hold the 702707, you go up to the 618. Anytime you reject off the 618, you come back down to the 702707. Hopefully you guys can see that range here very well. So we can't be surprised that, right, is the exact same range that we are currently playing with. Look, when you broke down, you came up, this was, even though yes, this is a new high in terms of diagonals, this particular move here was a bearish backtest of that breakdown, right? So what was once support got turned to resistance and you distributed, which is the whole reason you went into a consolidation chop period at 2024, right? And again, this is something we identified, we talked about back here when it was happening, right? But once what did you do after that, right? You came down to your next level. Once you put a cumulative structure there and you confirm that to be support, you once again bounce back up. And as soon as you accept back above this level, again, what is historical price telling us? Every time you go above this, where's the next area you go to? Well, that's the 618. So again, we can't be surprised. That is the reason why we've topped out of the 618, right? Again, I repeat, yes, there is no historical price action here if you consider strictly horizontal levels, because in that case you are in price discovery. But now if you consider levels that stick with you over time dynamically, right, i.e. diagonals, many different applications of those, this is just one of them, right? You do have a key area here. You have historical price action right over there. That's exactly what you're repeating here, right? Anytime you lost this, you don't long. But if you go above it, you don't short for no reason, because you know 618 is a valid target. So now that we're above this, we can't be surprised if we go to the 618 again, right? So in terms of diagonals, we have plenty of room to the upside still, right? We just need to get above, like I said, that fib channel 0.5, right? Let's just look at it in terms of the macro. We just need to get above that. If we get above this, your next key area is going to be around the 118 to 120k level, right? I'm going to give you a 5k range for now, 115 to 120. There you go, nice round numbers, right? And we can assess once we get there and we keep blasting up, then we can talk about the 130s and the 150s, so on and so forth, right? But that's one of them. Of course, we have other ones as well. The 50 resistance fan, that is the macro, is now from that low to your previous bull run high. If you do that, we have literally just accepted above the 0.5, right? You're not going to keep like, SFPing here all the time, in my opinion, right? This is your third attempt at closing above the 0.5. I will not be surprised if this is the actual third drive that sends you up now towards your next level. Okay, that's going to be the 0.414, which is out again around the 125k area, right? So in terms of diagonals, as long as you're staying above these, okay, this cluster here, right? As long as you're above that, and you can literally see that through history, right? I'm just going to put a line through. There you go. Anytime you're above that, you know, minimum 618, like we said, and then higher. Anytime you're above this, minimum 618, and so we've got that 618, and then after that, of course, higher. So for now, if you want some diagonals on your screen, you'd be paying special attention to what happens at this zone. Again, if you go down and turn this back into resistance, like I said, you wouldn't be surprised back at 92 if you get 92 again, because that's your next key area in terms of these diagonals in particular, right? But as long as we're above this, there is absolutely no reason. Hopefully you realize in terms of like historical price diagonals, and I place heavy emphasis on this. Again, if you guys are regulars on my stream, you know this. You are currently in the middle of a range. There's no edge to be had trying to short here or long here, unless you're doing so on the lower time frame. Okay, if you're trying to look for any higher time frame plays here, you could do this and go up. You could do this and go down, right? Either way, you're going to get chopped. So that's that, right? Anything else? We have the downtrend from the last completed wave structure. If we do that, we are currently at the 214236. Again, another reason why we topped out where we did at the same area. So we do need to get above this, right? So those are your three macro 5-speed resistance fans, okay? Two from the last completed wave structure and the third from the downtrend of the last completed wave structure. And together, this will be more unorthodox to people who do not consider like, you know, like diagonals, fibs with that much value. But together, this will give you areas, like you still trade very well off diagonal levels, right? At a close enough zoom, they will literally appear to be horizontals, right? So anytime, for example, that this was held, you had amazing scalp to swing opportunities to the upside, right? When you saw that flip there, that was another amazing opportunity to enter that trade. When you saw that flip, another opportunity to enter a long. When you saw the rejection, short. When you see the flip, long, right? You can treat this exactly like you would horizontal levels. The only difference is you are no longer focusing strictly on one price. You literally have historical context in your hands, which is a very powerful thing, okay? So there's that. So let me turn these off now. Right, so those are your 5-speed resistance fans in terms of the diagonals. What about your pitch fans? This were the last diagonals I look at. So first and foremost, based on your low, high, high, low from over here, right? The bottom was just a 2.0 extension. Your peak that originally came in, that was your liquidity rate of the range extreme, which was basically over here. I know I don't have the levels on the screen. That's because I have these memorized, right? So I know which one's which. But basically, that's the liquidity rate of the range extreme. We go up. This is now a liquidity rate of a golden pocket, right? Down to a liquidity rate of a range extreme. If you take a look, what was once resistance got flipped to support, right? Then it got flipped back into support. You had distributive structure here, which led you lower. Then you had a cumulative structure here, which is now once again sending you back higher. Now, of course, in terms of this diagonal, if you could get above this, you have room to go higher. But if you can't, then those are the triggers that's going to be giving you a flush. I'm not going to say a massive pullback, but a flush, right? For a massive pullback, you want a confirmation of like distributive structure to come in over here. With that being said, right, if you go to the daily now and you see a daily close below this, right, and you might be looking for even a hourly, hourly entry model, in which case that would have been when the previous hour closed about 40 minutes ago, right, initially speaking. But you can also wait for the daily close. If the daily were to close below this with a red, right, you could argue for perhaps like a attempt at a distributive structure in which you can at least risk some to hedge, right? But if you do not close below this, and you like, especially if the daily closes above, there is absolutely no shorts to be had here, right? So yeah, just look at everything with like a very in a holistic manner. That's what I always say. Just look at everything holistically. Don't pinpoint your focus just on this. What's happening as a whole? That's the most important thing to consider, right? Your macro pitch fan, no resistances. Again, this is your macro, right? The other one is not your macro wave structure. This is your macro wave structure. Low, high, high, low. If you do that, you have already flipped what was once a resistance into support, right here, right? Resistance, 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 flip to support. So according to this, the area where we topped out is higher, and again, that would take you to that 115 to 120k target we're talking about, right? So what's your takeaway from this? The takeaway is, if you're looking at macro diagonals, everything is pointing to further upside, okay? The only thing on the macro telling you that we could have a pullback is, like I said, the macro fib channel. right? If you cannot get above that 0.5, that might give us a small pullback. But again, that small pullback is going to line you straight back up. So here's your fifth speed resistance fan on the macro. Here's your pitch fan on the macro. It's going to line you right back up towards that area. So if you do not lose this, even any small pullbacks from here, it's just going to be another opportunity to load up on some scalp to swing mindset longs to get those moves up towards the actual targets, which are, if you consider diagonals, they are higher. Okay, so I know I went a bit heavy into diagonals here, but it's because right now the best way to explain, in my opinion, is through diagonals, right? Like I said, I know many people sleep on these, but they are so powerful. Like a huge portion of my system is literally just like, that I've created is literally just based around like fibs and diagonals, right? My own ratios and stuff. So diagonals very powerful. These things, like, it gave you the low, right? It gave you the low of the market. It's giving you all the highs. So the diagonal from this to this, right? The macro. Not that one, this one here, 50 resistance fan macro. The deep value 87886 was your bottom, right? And this was a viewpoint I was trying to give people back in 2022, but not many people take things like this seriously. But it's very powerful, right? In my opinion, it's a mistake to fade it just because it's not like, ICT or just like quote unquote traditional TA, right? It's extremely powerful pivot point. All these lines were on your screen as soon as the high came in. This is no data is not being fitted or anything like this. All you need is a low and a high. The lines are there automatically after you put them down. So from that high point, every single support, every single resistance you see would have been happening live, right? You would have seen it if you had this down in 2022, in 2023, in 2024, so on and so forth, right? So Bitcoin, the takeaway from this, I know I've been a bit heavy into Bitcoin today, is to make up for the fact I didn't stream last week. I was a bit ill. Bitcoin looks very good, right? There's only one major weakness I see, which is the fact we're below the 0.5. But if you can get above that, right, even then, that doesn't necessarily mean it needs to give us a macro flush, like something big. Like I said, you can drop down to your next macro diagonals data support before just rallying higher, right? We're just at that area right now where price is going to be very hard to just completely nuke price. So Bitcoin looks absolutely amazing. So what I'm going to do here is I'm going to check back to the chat, and then after that we can move on to altcoins and so on and so forth. Okay. Yo, what's up, Rohan, bro? How you doing, man? Oh, was Caleb here? Right, I don't think he's here anymore. Right. Realistic expectation for this period all-time high before summer cool-off. Do you mean, Cassidy, do you mean like time, or do you mean like price? Thanks, Phoenix. Nice, bro. If you mean price, Cassidy, the targets I'll be looking at would be in terms of wave structures. Your so 121,000 would be next for me. If we get above, if we can maintain above 109,806, 121,413. If we can get above that, 122. And for me, right, 152, 165. This is now for now. This is like euphoric targets. I would be completely happy if you got a blow off top between 121 and 132, let's say, and then like just actually had the bear period after that. I'll be completely happy. Okay, I do not care if we do not go to 152 to 165. I've already made my money, what I wanted, plus like more from this cycle. So anything from here on is literally just a gifter, right? So if we do keep riding high, for me that would be a shortened cycle scenario. What do I mean? Blow off top to a severe dump. If we have a chop around June, if let's say June we do something like this, right? Hang on, like June, right? We do something like this, and then mid-July or something like that, we reclaim. Then that would lead me to a normal cycle scenario, and in that case, I'd be looking at around maybe even go above 132, and by around September, October of this year, perhaps, right, to 150 to 165. But depends. Do we get a blow off top or not? If we get a blow off top, I wouldn't disagree with you if you said the cycle top is in, right? If you get a blow off top, for me, that'd be like, okay, maybe the cycle top is in, right? But for me, yeah, it depends entirely on do we get a blow off top or not. If you get a blow off top, I wouldn't be hedging my bet saying, oh, we're gonna go to 152k with chest, right? I wouldn't. And for the blow off top, I'd want it anywhere between 121 to 132 for now, just level by level, right? First level here, if that's broken above, then aim for this next until you get back below. So for example, right, you go up to 121,413. If you see rejections, then you can try to look for scalp to swing mindset shorts. If you close above, you're not shorting, you're not doing anything until you either get to 132 or you break back down and reconfirm 121 as resistance, right? Those are going to be 2 triggers to try and look for shorts. That's it. But if you get a blow off top cycle, then somewhere between 121 to 132. If you get a normal cycle scenario, I wouldn't be surprised if you got 152 to 165. I still don't think we're going to get 200k plus this cycle. It'd be great if we did, of course, right? Just more money for us at the end of the day. But I don't know if we will, right? You see this every cycle where, you know, last cycle was 100k targets, right? When we were at 60k. This cycle is 200k targets when we're at, you know, like 110k currently, right? You always get these, like, you know, cycle targets that are very, very euphoric. So for me, I'm just going to play level by level. I'm not going to tell you guys I think we top here. I'm going to give you targets. These are targets to hit. Are we going to top here? I don't know. Price action is going to tell me that once we get there. Right? In the same way I give you guys this target, I give you guys total 1. I didn't give you guys those thinking we're going to top here. Once we hit there and price action told me, okay, that looks distributive, then I was like, okay guys, I think we're due a pullback, right? So it's just targets, and after that, price action literally determines the rest. Yeah. Nice, bro, Rohan. New all-time high. Sell in May and go away. The dip to 90s as you showed. Blow off top in Q4 with Australia end of cycle. Yeah, I mean that's a possibility for sure. Guys, we have how many days though? We have 4 days till May's over, right? And then sell in May goes away on its own. So maybe like a early June dump, something like this. But yeah, it could happen, right? But ultimately, price action is going to tell us everything we need to know, right? So I'll just keep an eye on price action. But yeah, let's see what happens. We've got 4 days, to monthly close. So okay, so if that's that, let's take a look at ETH next. Okay, yes, we'll move on. Ethereum, right over here. Index, beautiful. Okay, so we were talking about this from here, right? I gave this as like, again, this is the area we're looking at. Like even when we were here on ETH, right? I was saying, you know, I'm 6 figures into ETH. If we go and lose 2150, I'm going to trim my position because my average was low 1000s, right? That was my old average. If we lose that, there is a risk we visit that entry again. So I'm saying if we lose 2150, because I already taken profits on the move up over here. If we lose that, I'm gonna, like, you know, just massively downsize on my ETH position until we get lower. And the target I gave you guys, again, this is, I'm not just saying it live here now. If there's some people here that remember this, you know, we were talking about this a lot about the drop down towards HPR2 mid. If not, it's going to be on YouTube, right? Just go to my YouTube, like look at a few videos that we did around, like, you know, February, March. These were the levels we were talking about, right? Once we got there, this is the price action you want to see. I don't have any order flow on right now. Literally just off this wick. When you see something like this, it's so easy to manage your risk. That's it. That's all you have to do. Minimum RR3 trade, right? To the top of that, that'd be that. So you had a trade that is very much worth taking, happening at the key level that was given, like, ahead of time, right? And then once that happened, I was still telling people, okay, this looks good now. If you're gonna get spot ETH, that's it, right? Said it on my video, said it on stream. So if people didn't buy, I'm not gonna give an entry here right now because this is not a place I would buy ETH. Okay, my average is somewhere down over here. Now, I mentioned this last week in the stream, but in my own group, I also gave it the entry in terms of order flow, right? So if you were to, again, look at ETH, I'm going to go to Ethereum on the Bybit chart, okay? Here we go. If you go and take a look at Ethereum, on the monthly even, what do you see over here, right? On a monthly close, what do you see? Massive. We know that initially the candle was a huge sell-off, right? Because the wick is very, very long. Look at, you have 64.09 million traded in volume, with 1,230,000 of it being on the seller side, meaning the sellers won out over the buyers. So there is way more aggressive sells than there is aggressive buys, right? But does the candle reflect that? The monthly close definitely doesn't reflect that, right? So if you look at this monthly close that happened at the end of April, right? You have, again, you're saying you have 1.23 million more sellers than buyers, right, in terms of volume. And yet, if you look at how the candle closed, you closed above your point of control. You closed above that low. That low, literally, where you have all these market shorts coming in. You have 551,017 shorts versus 391.21 longs. So way more shorts than buys, even at these low prices, right? You closed above that. Like I said, closed above your point of control. And more importantly, you closed above your entire value area. For most people, 70, for me, 68% of all traded volume took place within this range. That's your standard deviation 1. Okay, you closed above the entire thing. You have a bullish hammer candle, basically, right? It's not quite a hammer because of that top there, but that is an extreme. What is this candle telling you? It's telling you sellers go absorb. That's it. Very, very simple. This is now telling you that all the people that shorted are instantly offside. There is liquidity to be generated, right? Should you go against them, right? So we can't be surprised that the market did decide to go against them, because these people now that shorted, they are going to be forced to cover. When they cover, that's going to generate liquidity. That's going to allow for liquidity to be unlocked for now big players to get their bids filled. So if anyone wants to short ETH, they're going to do so at a price they want higher, right? It's not going to be down over here. We have the same thing on the weekly. If you take a look at the weekly down at ETH over here, and this is what I personally put in my own group, right? I was saying to people, take a look. We have all this aggressive selling going on, right? This was start of April as well, right? We have all this aggressive selling going on. We have 23.06 million in volume. Look, that volume is already an outlier, because if you look around it, 13, 10, 12, 8, 6, 12, 19, that is an increase in volume, meaning there is huge amount of swaps happening. And of course, we see this, right? This is not always the case when you have, like, you know, big flushes like this or even melt up. But we have 23.06 million in volume. We have this volume leaning on the seller side, right? So we have 313,710 more aggressive selling than buying in terms of volume. So obviously we're saying this candle, very much aggressive sellers were the dominant ones. Your market sells, your market shorts, they were dominant over your market longs and your market buys, right? But again, does the candle reflect what the actual data is? And the answer is, once again, hopefully you guys see this, is a no, right? The candle doesn't reflect that. What you see is, you see that in the face of all that aggressive selling, you have closed above your point of control, right? This is above the point of control. The reason it looks like this is because I've got the ATR on, right? If I was to change the, in fact, let's see if I can do this. If I switch to tick based, yeah, there you go. See, you closed above your point of control, right? Your most traded volume was over here, 1,567. You closed above your value area low. Notice the disparity in selling pressure coming in, right? Notice the disparity in selling pressure at the lows. So again, what we're saying is all these aggressive sellers are trapped. There is liquidity to be generated, running their stops. So the thing I said in my own group at this particular point was, by no means am I saying ETH is 100% bottomed, but at a minimum, you can expect a reversal simply to stop out all of those trap traders. So we cannot be surprised when we go to the next set of sell clusters, which is up here, and now we're chopping within there. And even this candle right now on the weekly is looking fantastic. You're closing above everything right now. Point of control, your value area high, value area low, everything. So perhaps you go even higher to take out these sell side liquidities, right? You've got more liquidity to the upside. Only after you take these out do you now maybe have a flush back to take some of these out and then go higher. But otherwise, you see this, right? ETH was looking extremely, extremely bullish down over here, right? So I got my people in early on this one. Spot got a swing open, right? So whatever I sold off, I'm back in. I'm nearly 7 figures deployed in spot right now. Okay, so some people seem to have the opinion that I'm sidelined just because I've not been streaming much. That's because 90% of my money right now is in spot. When you get lows like that, you do not need to leverage trade. You just need to buy and hold and not get chopped up. Okay. So I'm nearly 7 figures deployed. I still have a bit of cash left to deploy, right? And that's 7 figures deployed, nearly into spot, nearly 7 figures into spot. Of course, I've got my leverage swings running on top of that as well, my scalps. But mainly, it's going to be spot doing the heavy lifting. For the coming months, in my opinion, it's going to be spot doing the heavy lifting, right? So that's why, when you have spot, you just buy and chill. That's it. Remember, the goal of higher time frame trading is not, can I buy the exact bottom? Can I sell the exact top? No. The goal of higher time frame trading, swing trading, right, is can I build a position as close to the low as possible, right? with at minimal risk to myself, where I'm positioned on the right side of the market. So you don't want to be fully positioned in a downtrending market, which is also why, like I say, I don't agree with the entry DCA1, DCA2 method. I don't agree with it. Once you go back into an uptrend, that is fine, right? But when many coins hadn't done that, it hadn't done that. So that's why up until now I have not given an entry DCA1, DCA2 method. Instead, I've got my own system that I've told you guys in the past. I've explained it. The 20-40-40 I call it, right? But the ratios you change however you want, depending on your risk management. That's my entry model, right? When you go to an area of interest, that's when you do your first deployment. But you always save an allocation to DCA with around your areas of interest, or if you size up with if local resistance gets flipped to support. But you always save an allocation for when the actual trend shift occurs, and you go from your left side of the V to the right side of the V, from the sell side to the buy side, right? When the last lower high that led to the lower low gets taken out and a higher low comes in, that higher low is the last place you want to size up. You don't want to be fully positioned before that, in my opinion, for spot, because otherwise you're just exercising going all in before the trend shifted. Right. But right now, ETH looks absolutely fantastic. Would I enter here? Hell no, because I see no edge in me entering here. Spot is different. If you want to just buy and hold and forget about it because you think ETH is going to go higher by the end of the cycle, that is different. Buy and hold spot, just get rid of it if the microstructure is lost. But especially for leverage as a trade, there is no trade for me to give you here. I was very vocal this entirety of this time. Right now, I cannot be vocal. The only way I will give you a trade is if you SFP off that level, that's a potential short to be had. If you have a drop and you hold this level, that's the next area you want to bid. That's it. Where you currently are, I have absolutely nothing to give you. Right, that was the entry. That was the swing entry. Rather the scalp to swing entry I gave in my group. I shared this in my YouTube as well, so you guys should have seen it too. So what does a scalp to swing mean? You enter a scalp trade with a scalp mindset, right? But instead of going all out at your risk target, right? In this case, risk reward of 3.37. Let's say you take 40% out, and then you attempt to turn the remaining of your scalp to a swing. That's how you take a really high, like, you know, if you go, like, for me, I'm a risky scalp trader. I size a very heavily risky, huge amount of my port every time I scalp trade, right? So make it or break it kind of a scalp trading strategy. But you can now have a really nice, like, positioned, like, you know, high leverage long. So if in the past, if you've ever seen me share these extremely, like, you know, 200x like swing plays, right? I don't swing on 200x. Anytime I have shown you guys, especially in 2023, I shared a lot, right? Where I've got a swing play in like 75x, 100x, 200x. That's because originally it was a scalp, and then I managed to turn that scalp into a swing. That's it, right? So for my people who entered here, you have now the opportunity to turn that scalp into a swing. As long as this low is not revisited, you are safe, right? So for example, if you come back down over here, whatever profits you took over here plus some extra, you can size up with when the bottom gets confirmed here, right? Your average is going to be somewhere over here. You can put your stop loss to break even straight away. You have a scalp to swing trade. There you go. Now you treat it as a swing rather than a scalp, right? But ETH looks extremely nice. It looks fantastic, right? You do have this is something we mentioned already. I mentioned this a previous time as well. In fact, let me just turn it on. I think I've got it here somewhere. Yeah, you do have a supply zone over here, right? This here, you have hit the mid of that, you've rejected it. If you can get above 2738, I think you pretty much go towards 3000, right? I think 3000 ETH comes very soon, above 2738. But if you keep SFPing around 2738, you can look for some scalp shorts back down towards this box between 2282 and 2030. Okay, otherwise that's it for ETH. If you want to do spot, you could do a small amount here and then size up should you get that drop, right? Maybe like 40% over here, 60 over here. Invalidation would be if you lose 2030 as support, but I'm not going to be doing this, okay? Because like I said, I'm already positioned from here now. I don't need to add anything to ETH. But yeah, that is Ethereum. So let me check back to the chat and see, are there any questions on that so far? The micro strategy of Ethereum has emerged. Sharply gaming analysis. Jesus Christ, 425 million private placement to initiate Ethereum treasury strategy. That is sick. Crazy. Yeah, it will appear. That's the thing, bro. Like a few people that always hear, bro, like Rohan, bro, you know? Mecca, you're always in my streams. How many times was I telling people, even when we were here, right? This was the entry I gave back in 2024. How many times was I telling people, yeah, everyone's shitting on ETH now, but it's not going to stay like that forever. Right? These are the moments when you bid. This was the thing this was the rhetoric I kept telling everyone. Because if you were gonna risk anything with size, the moment it made sense to do so is always the moment it's most uncomfortable, and that was right over here. In the face of all that downtrend, you had an area where you could manage your risk based off based on what was happening in the markets, buyers taking control, right? Based off seller absorption. And now it's like, is it too late? No, it's not too late, right? If you think it is going to go higher. So for example, in terms of wave structure again, if I was to show ETH in terms of wave structure, the one I have is, do I have it here? It might be here, 1 second. On the macro, this is what I'm looking at on ETH, right? So this is the other one I had with you guys. Same key inflection areas and stuff, but where the has it gone? It's there. Right? That is a 786 retracement. That was another thing I pointed out. That's a 786 to a 786. At a minimum, if this is the low, right, you are going to get a butterfly pattern going to the 1.272, which is at 5,953. If that ever goes to the hop, that's going to go to the 1.414, and the 1.414 is going to be at basically 6,518. So now you have targets going up on Ethereum that were there, like that it was there developing, but most people, you know, they're not going to take things like this seriously in a downtrend, right? But now, you know, all of these are just extremely valid targets on ETH. What other things do we have? ABCD, that was a 786 retracement. A 786 sends you to a 1.272, right? So that gives you a target of around 4,770 on ETH, right? 1.272, if I give me exact. Come on, man, 1 sec. There you go. 4,777.15. Not even all-time highs. I think we could rate that all-time high. Another thing, you have this still valid, right? ABC. This is your 2022 low, 786. 1.272 would take it to 5,889. So you start putting these out. All of a sudden, you have all these targets higher on ETH. And yet no one pays any attention to them. They're so focused on, oh, we look so bearish, we're gonna get 3 digits Ethereum. No one bids. Everyone's too scared, too fearful to bid. And now, in the middle of a range where realistically you do not have an edge yet, this is when people will start piling on. And this is why, as well, leverage flushes are so common during moments like this, right? Because now everyone gonna start piling on over here. You're gonna get leverage flushes, and then you're gonna resume. Is what it is. But Ethereum looks absolutely fantastic, right? So that's Ethereum. So is there any questions on that before I move on? Price targets for hype. Yeah, I can go over that. Yeah, BTC dominance. If it breaks trend, if it actually keeps going down, we're gonna get that impulsive move. Like I said, I think if we do get one more flush, right? I would love to see one more flush. Honestly, I would love for late leverage, because I know so many people that were bearish down at 70k now trying to, like, you know, get bids in here. I would love for just one more shakeout of like the late comers, and then after that resume just up only, right? So that is that. So okay, we'll look at hype next. That's a good one, because again, hype is another one we went over a lot, right? For hype, my average is $9.90, $9.90 for spot, right? Again, this one I've already closed, right? So this is the scalp to swing I was talking about, right? My average entry for this was 996, right? Based off that same level I told you guys about, 786. We're gonna get that next, right? And then initially it was a scalp. Once your risk to reward is hit, I managed to turn it to a swing. And in my own group, I said, you know, this might go higher, but I'm happy with the profits from this. I'd rather like get this money out, right? Because this was like, you know, this was about 32k in profits, right? I'd rather take that out from here, and then I'd rather just swap it around to just into more spot, or just see if you do get a pullback, then I would rather what's the word, like compound with it, right? But that is that was the scalp to swing entry. Now I still have my swing open, right? The swing from my my average for the swing is like $10 something. It's on my Twitter. I shared it the other day. 1 sec, let me see if I can get it up. But for that swing, right, we took some profits out. I basically gave this thing, if like, you know, basically I gave the signal the other day in my own group saying, if you got in with me at these lows, just like take profits here, because now we've rated all-time highs. There's no way I'm not going to tell my people to not take profit, right? So that was that. But if hang on, let me go to X. It's this one right over here, if I can find it. I think it's on my if you click on my profile, if you go to my Twitter, it's gonna be there. It's the last thing I shared. Yeah. So the average on that one was 10.15, 10.156. Yeah, that's the one. So that's the swing entry that I've still got. And spot, I've not taken any profit on spot, right? Because I see no weakness. I'm gonna take profit if I see weakness. My high time frame strategy for what's it called, for spots is I'm not gonna sell just because the level gets hit. I'd rather sell once we get price action confirmation. There's the difference. Okay. If you get to a resistance and you don't see sellers stepping in, there is no point taking profit. In the way I see it, the way I do things, there is no point taking profit. I'm a very active trader, right? I can allocate as much time as I want to the charts, right? So I'd rather just have order flow, and if I see sellers are actually stepping in, buys are being absorbed, that's for me the sign of weakness. I will take profits. Otherwise, I won't. Because let's say you've taken profits just because of a limit at 35.51. Is that a bad thing? No. I am by no means shitting on anyone that would take profits at 35.51. However, I would rather have that edge of being like, okay, sellers are not stepping in, so we could carry on going higher. Now, what do we have? We closed above, and for now, that is a back test of this. So if this flips, we're going to go higher. So for someone who asked me my hype target, my next hype target right now is $42.57. After we get that, I would really want to see a pullback. Do we get it or not? I don't know, but we do have a wave structure going there, right? ABC 786, so the 1.272 would be at 42.57. And that's that, right? But this was an absolute beauty of a trade, yeah, for sure. Again, this was simply just a matter of get in, right, and hold, right? What did we have over here? Lower low in price, right? All things we looked at. Oh damn, I did not mean to do that. One sec, I hate it. There we go. Firstly, if you look at MACD, lower low in price, higher low in MACD. So that you're saying even though we're getting lower lows in price, your actual selling pressure, your selling volume's dying out. Also, lower low in price, higher low in RSI. So we have class A bullish divergence, not just on the MACD, but also on the RSI. Now, relative strength index, you're saying lower low in price, but your RSI, your relative strength index, is making a higher low, meaning the relative strength behind the sellers is fading, and the relative strength behind the buyers are increasing. All going into a 764, right? 786. Very, very powerful again, right? So my target hype right now would be 42.57. I honestly don't have anything higher than that. I can if I pull fibs on. Let's do it actually. Hang on. Let me go to new hype chart. Let me go to here. New canvas. So let's delete that. Bitget, right? Let's do something different. Let's look at log. So we have this. So based off that, I would not be surprised if things went absolutely parabolic. We did something like this. This is going to be the extension. A lot of lines. I've got my own system. All you need to focus on is this, okay? If things go absolutely parabolic, I would not be surprised at $81 hype. You heard it here first, $81 hype, right? If we go into a full bull run, do not be surprised if these targets, even 90, do not be surprised if these hit. Let's do this. I'm going to go and I'm going to draw a box here. And if anyone wants to record this, clip this, whatever, I don't care. Do not be surprised if we go into a full-blown alt season, if we get anywhere between 81.17 and $91 hype. Okay, do not be surprised. And can we go above that? Sure. Can we not reach it? Sure. Right? For example, if you're going to play a bit more conservative, then the targets I'll be looking at is over here between 52 to 61. Let me actually make that a bit wider. I realize I didn't include the front runs or basically the manipulation levels of the golden pockets. There you go. Just two boxes on our screen between 77 to 91 or between 52 to 61. Those are your two targets. If you get above that ABCD, that pointed out here, right? 42.57, which has confluence, by the way, with your, in this case, for me, my system, this is the liquidity rate range extreme. If you show weakness there, you can take some scalp to swing mindset shorts because maybe you get a pullback before going higher, right? Maybe you do something like this. You do this, and then you do something like this, and then do that, right? Maybe. But if you do not, then you just keep closing above this, then it's going to be a melt up towards these levels on hype. So that's that. Very, very simple. Like you did, you know, wave structure wise, we only have one, right? So if you get above this, until new wave structure comes to light, I can't do anything else. It's just literally just fips. You do that and you wait. But yeah, that is hype. Right, let's take a look. What else do we have? If force, let's take a look. Anything on my watch list right now? Let's take a look. What's due? So AVAX hasn't really moved. I think this one has taken out the last lower high that led to the lower low, right? So the last lower high that led to the lower low, taken out. For now, high low has come in. So AVAX is one that hasn't really moved. You guys, if you're new to my streams, I could go on about why I love AVAX for like an hour or two. I don't want to put the other people that are regulars through that again. So, but AVAX looks good, right? You can very easily manage your risk on AVAX. Okay. Say's another one that looks good. Another one that's taken out the last lower high that led to the lower lows, and higher lows are now coming in, right? So that's something else you can also try to build your position on, right? Say, I'm still really interested. In fact, okay, talking about SWE, let's look at CETUS, okay? Because I understand why many people are going to be scared of CETUS if you entered late, but if you entered when we were talking about it, which is again Gartley 618, 86 at the bat, where you spent a long time here, and I was saying this is where you enter, this is where you enter, we are still fine. Okay, all you did was this pre-drawn target we drew ages ago, saying, okay, if you ever drop down, there's a fair value gap, this is your lowest. We've just hit that now, right? So we could come down and we could get a type 2 return, right? In terms of harmonics, that is bullish. We could get a type 2 return in the form of a shark to that level, right? And then go back up, right? I hope that doesn't happen. I hope what happens is they front run this level and then they just reclaim and send it, right? But for now, I think CETUS is a bit precarious. It's because of the hack, because of all that thing that was going on, right? If you cannot get above this, let's keep it a bit simple. Let's get rid of. Hang on. What's the best way to draw this? Let's get rid of this one. Let's do this instead. So if I go to the weekly, you have this zone right over here, right? This is the one that needs to be flipped back into support. Okay. If I see a daily close below this, or hang on, what about the 3 days? When does the 3 days close? Is it today? Yeah, okay. If I see the daily 3-day close below this later today, then what I'll do is my average, which is from 0.08, right? So this level down over here, I'll scale out of it slowly just to size back up if we reclaim, right? Because I'd rather like start scaling out now, just in case we do turn into resistance. Like if that happens, we'll just see, right? Historically speaking, anytime we've rejected off this area, you know, you've come back down towards like 10 cents minimum, right? I'd rather just scale out, and I'll just size back up if we reclaim this in the future. But if we do, I mean, let's say with the daily close above, and let's say especially the monthly close, if the monthly closes above that box, in fact, this is a beautiful way to view this. Hang on, I can't believe I've not put this on yet. Where shall I do this in? That's going to be 4 intersections. So let's try here. One sec. CETUS. Yeah, currently below your standard deviation 1 value area high as well, right? So that's a bit of a problem. But if I do this, in terms of your diagonals, you've hit the deep value zone, right? Let me turn that and this off. If you go to the monthly, I would have you focus. That's not a key level. This is here. Perfect. It's saying basically my system, what I'm saying is this is the total area where both buyers and sellers were active, right? And you've gone to the mid of that area and it's support for now. So as long as you do not get below 0.12557, I'm not worried at all. If you start turning 0.12557 into resistance, that's when it gets a bit hairy, right? But ultimately, hopefully you can see this is going to look infinitely better if you can get above this zone between the value area high of your standard deviation 1, right, 0.14, and your 0.1449, right? So if this zone can be flipped into support, in fact, let me do this on the daily, because that will change whether it is. There you go. If we can get above this level, so one is volume based, one is my own system. The white is my own system, the blue is volume based, part of my own system. If you do this, if you stay below that grey box, yeah, it's going to be a bit shaky. I think you have some sort of flush before going higher, right? If you can reclaim, I think your low's probably in. I think if you can reclaim, you probably like resume up. Don't forget, Hype had this. Obviously, Hype didn't have like as much of a FUD with it at the lows, but don't forget, Hype had very similar FUD down at these lows, right? Where is it? Focus. Hype had very similar FOD down in these lows, and look what happened after the FOD, right? So many times FOD is literally just there to shake people out. You need a reason for price to dump, right? You need a reason to shake people out. So when these were happening, hype was being FODed to all hell too, and now look at it, right? So just in hindsight, of course, like in hindsight, that's easy to say, but the key thing was you don't listen to the FOD here, you listen to the TA. Okay, there's all that FOD, but bullish divergence is coming in, and 786s are being respected, right? And wave structures being respected, extensions are being respected. Hang on, if we were to do this, if I go to hype on, let's see order flow, right? Let's go to 4Bybit. This is my scalping portfolio. So hype USDT perpetual, perfect. Okay. Do they have data old enough to go to the low? The answer is they do. That's what I'm interested in. That right there, $9. If we take a look at what kind of price action was coming in, right? So let's even switch to the daily for this. Does it go that far back? Yes, it does. What kind of price action was coming in at these lows? On the daily, like literally just bullish price action indicating the buyers, indicating the buyer strength, right? Firstly, what about the weekly? Anything showing absorption on the weekly? Actually, you had very straightforward price action here. So you had seller absorption over here, then you had a steady grind down because of the more FOD, but then you had this massive weekly bullish engulfing candle, right? Off the back of the what's the word? The weekly bullish divergence. Did we have any cumulative? Let's take a look on the daily. What about the 4 hours? 1 second. There we go. Yes, we did. So this right here is showing you CVD, okay? Cumulative volume delta. Off the back of all of that aggressive selling, right? All of that FOD, and these green dots here also another way of another thing telling me there's a huge amount of like market shorts opening in this case. This is the perpetual chart. What do we see over here, right? Cumulative volume delta, massively negative, right? So you have a low here. Just I would like you to notice this: low, higher low, but low, lower low, right? What does that mean, right? That is what we call bullish CVD. Okay, that is a sign. Again, just like how you would have bullish divergence in terms of delta, this is bullish divergence. Okay, what does this show us? This shows us exhaustion. Right, this shows us just seller exhaustion. That's it. You're saying, look, all of these sellers, right? The CVD going down means the cumulative volume in terms of shorts is going down. Shorts are opening, right? Look, CVD on the right, negative, negative, negative. Huge amount of shorts are opening. But look at the price. Price is making a higher low when CVD is making a lower low. Meaning, even though all those shorts are opening, right? All that sell pressure is coming in, the price has made a higher low. What does that mean? When all these shorts open, when all this sell pressure came into the market, they couldn't do enough damage to make the price do a lower low. So we're saying, right, in this discrepancy, let's say, you know, there's the region where all of these opened, right? That's the region. Since the price made a higher low in this region, we're saying, even though that's where all that selling pressure came in, all the shorts opened, this is where now again, passive buyers stepped in, right? So all that selling pressure couldn't overcome that buy wall from the buyer, or from the passive buyers. In this case, it's passive longs, right? Limit longs. All those aggressive sells couldn't overcome these limit longs in terms of CVD, cumulative volume delta. That is a sign of exhaustion, sign of reversal, right? That happened when? After you had confirmation of, if you look at RSI, after your confirmation of weekly bullish divergence, right? Daily bullish divergence. Did you have one in the weekly? Let me take a look. No, not on the weekly, sorry. So daily bullish divergence, 3-day bullish divergence, right? So you had 3-day bullish divergence on the RSI. You had daily bullish divergence, Class A, all of them on the RSI and the MACD. So if you have all these signs of trend reversal going on, right? That's what these are signs of. Now on top of that, after all that comes in, you then have, in terms of order flow, in terms of aggressive buying and selling, you have the fact you have bullish CVD as well. After, right? This is after the divergence was confirmed. comes with your very own smiley face. Again, if you're new to my stream, that simply means a cumulative structure. So you had bullish CVD creating off the back of the right shoulder of your cumulative structure, which was created off the back of daily and 3-day bullish divergence with both RSI and MACD. All of this is pointing to seller absorption, i.e. buyers are showing immense strength, right? No, this is when if hype was bidding fodder to all hell, right? The reason I'm pointing this out is because I feel like CETAs right now is in a similar position, right? If this is lost and all market structures lost, sure, CETAs is going to go to zero. But until then, if I see a opportunity to size up, if I see a reclaim, right, something like this, or as long as the 0.12557 isn't turned to resistance, if that is, the next area I look to get back into after I scale out would be back at the bad 0.886 at a type 2. I don't care, as long as I see buy strength coming in. I see TA telling me that buys are stepping in. I do not care what FOD CETAs has. I'm just going to trade the chart. Okay, charts, they tell you everything. Look, before CETAs dumped, you had distributive structure at the first target of the harmonic. If this is the bat, this is your type 1. Okay, this is your T1. This is your first target of the harmonic. You had a double top followed by a raid. Very classic distributive structure, right? At the T1 of the harmonic, wouldn't that be perfect then for someone to hack and drop the price down? You hit your first TP technical target, right? And then the FUD came out. So I'm telling you, like, just TA over everything. Charts will, if you just focus on the charts, like 99.9% of the time, you're gonna front run any of these like random ass news that comes out, right? These events will happen. Guarantee if you go and look at Luna, right? If you go and look at Luna before the dump, well, I'm not going to do it on stream here just to save some time. If you go and look at Luna before the dump, you're going to see bearish divergences on a lower time frame, maybe, right? Maybe not on the weekly. I don't know. It could be on the weekly, but definitely on the, like the 4 hours or something. I'm sure you'll see distributive structure, right? So inverted smiley faces. You'll see bearish divergence. You probably saw absorption on the order flow. You probably saw like key diagonals, key horizontals being SFP'd. I'm sure all those signs were there. Okay. But yeah, CETAs, for now, this is your monthly level, okay? This is monthly, very significant. As long as the mid is held, it's good. If you lose the mid, then I'd say you probably get a revisit of 0.09, rate these lows or something. But even if you do that, if you can reclaim this area, we just got the same entry again, right? We've already taken profits on this move up. Stop losses are break even. And if you cannot get above this, I will start front running that stop loss by scaling out, right? Until we can reclaim. So it's what it is, like with CETAs. If you entered here, you're chilling for now, basically. But SWE, under the ecosystem, someone asked, like, what are you focusing on? I'm focusing heavily on SWE ecosystem, right? I think SWE does amazing. We're talking about this for a while. Original SWE entry again. When was the SWE entry? That was right over here. Right, so we talked about SWE here. We said you have a bat on SWE 886. Key levels in terms of, again, volume profile, fixed range volume profile. Breakout from the supply line. You had the smiley face, accumulative structure. These were the last entry that I gave on SWE was here, right? A couple months ago. Then it was the flip of this 3.18, and right now we front run a godly. I would love one more flush on SWE. So if you go and you turn this into resistance, for example, right, 371.66, you start seeing SFPs here, some sort of distributive structure. You could try and take a scalp short, scalp the swing mindset short towards 318 and lower, perhaps, right, based off that key level. But the area I'd be interested in is between this Gartley, which is at the 786, around 337, let's say, and the deep Gartley, which is going to be at the 886. So those are valid level. 330 to 320 would be completely valid, even back to 318. Maybe like a higher low there, and then like continue back to the upside, right? But yeah, I think focusing on the SWE ecosystem is going to be good. Ondo is another one you could look at, right? It hasn't really moved, but it looks extremely, extremely beautiful. Ondo looks so good. If I show you guys Ondo one we talked about, right, a while ago. Here, we talked about how we had distinct PRZs for Ondo. The first PRZ was this one. If you get below that, we said look at the second PRZ. If you get below that, look at the third. We never got to the third. The bottom came in at the second, again, with bullish divergence, right? So that's the entry for Ondo right now. And we've never been revisited again. Even think about how much chop the other coins have experienced. Ondo hasn't. Someone is steadily accumulating this, right? This is what healthy accumulation looks like. So Ondo is one. Like if you want to get in Ondo, like for now, your risk management for Ondo would be very simple. If you get into spot, I'd just say if you lose the top of this box, you break back into the previous consolidation. Just go draw this box on. If you break back into the previous consolidation, just cut your position, right? So that would look something like let's see, where's a logical place to put this stop loss? Something like this, right? 10 to 12% stop loss if you're getting where you currently are. Ondo's one. I'm already fully positioned on this, okay? But there's still a few coins like Doge. Did we get that? One sec. Doge, we talked about this. Yeah, smiley face, right? Doge is another one we talked about for a long time. Flip this back into support. Above that grey box, you know, you've got a really nice entry on this. So many alts, right? Trending, shifting structure. So there should be no reason why anyone's looking at these charts and thinking, oh yeah, I can see a 60% dump from here for no reason. There isn't. You've taken out the last lower highs, that led to the lower lows. For all we know, the higher lows have already come in, right? Even if they haven't, I think one more flush and they come in. And if you, like I said, if you do get one more flush, that's going to be the entry. Aptos is another one, by the way, very good entry, right? In terms of also literally the same ones we talk about all the time. And the reason that every stream I do, I go over majority of the same coins is because I do not want you guys to be scattered all over the place, like scattered in the winds, they say, right? On 100 different positions. No, focus on a few, size up on those instead. I think that's how you make your money. Okay, you're gonna outperform if you put like $100 into like 100 different projects, right? It's gonna be so much better for you to just like take that, like take the 10,000, right, and just split it maybe within like 3 to 5. That's gonna make you so much more, I guarantee it, right? But yeah, there's a lot of projects. Obviously, hype is not something you want to get into right now. Ethereum, like I said, not right now either, middle of nowhere. But yeah, Aptos, AVAX, say there's so many, right? Ondo, yeah, Ondo's another one. There's loads. If I go to Focus V2, LDO and OP, those are those you can look at as well, right? Look at OP, beautiful place, right? All of these become target. That's for now, that's a euphoric target, $7. But from here to even let's say the 618 of just the first, right? Very conservative, 175, right? The 618 of the second, 352. You're not going to be complaining at that point, right? Ondo's one. Not Ondo, sorry, OP. LDO's another one. If you take a look at LDO, right? You literally have all these, again, wave structures, loads of them, right? Loads of targets to the upside. You have weekly bullish divergence on Ondo. If you take not Ondo, oh my god, LDO. Lower low in price, higher low in RSI, right? So just like many of these, it might take some time to play out. These are all on the higher time frame, like the weekly. But this is why I'm like literally 90% in spot right now, right? I'm not gonna take never enough 7 figures and then gambling down 100x, right? Which is why, like I said, never enough 7 figures parked in spot, right? I have a few more. I've a bag of USDT left. That's gonna push me over in 7 figures once I'm fully deployed in spot. But I'm not gonna be fully deploying right now, just in case we do get one more flush. I do want to add on that flush, right? So I need some for that. Apart from that, just scalping and building some like swing plays. That's it. I think ETH betas will do well. Like I said, if ETH goes to those targets, LDO, OP, ETH5, there's others, right? There's gonna be others. ETH5 is one. Arbitrum, right? If you ever reclaim that low on Arbitrum, this thing's gonna go nuts. GMX, right? This is very well positioned for saying it's an ETH beta, right? Because ARB is under ETH and GMX is going to be a DEX for Arbitrum, right? So if ETH does well and ARB gets a liquidity rotation, GMX is going to get one as well, right? And I think GMX looks really, really good too. Is it this one I've done TA on? Let me see. Yes, it is. So we have this, right? All-time low listing in terms of MEXC got rated. I don't know if there's a chart with all the data or not, but this is a target that got completed. What did we have originally? Originally we had this shark, right? If you guys remember the 886 of the shark, this is the one I gave in a stream first, saying if you're getting here, your first target is that 886, right? We did this in last year. We hit that target and then we drop lower, so that 886 is no longer valid. The next area that's valid for the shark is the 2.24, which is down over here. We haven't hit that yet. There is also a crab, okay? So if I turn that and that off, if you take a look, from here, XAB, that's a 618, okay? C is an 886, so 1.618, there's your crab. Right, so if you get one more flush, I'd love for GMX. I'd love to pick up GMX around $65 if we get it. And of course, I'm not going to set limits there. Okay, if you set limits, it's going to be extremely low position because you're going into undiscovered territory. In this case, you want price action to tell you buyers are stepping in here before you even decide to start punting stuff. But the area we're bouncing from, and again, there's no reason to expect this if this happens to be the low, is again a crab 1.618, and that is right over here. XAB 618 CD 1.618, right? So GMX is one I think very, very nice, across this area. Right now, my entry was down over there for this. So either I get stopped at break even. I'm not taking any profits. I'm not taking profits here, right? I'd rather just round trip the bag and get stopped at break even. Uh, I would hate to take profits here only for this to go. That'd be so much more painful than round tripping something when it's not time yet. I'd rather round trip at risk free than take profits early. If you lose that $10, then $6 to $5 is next, right? Otherwise, there's a reason why it bounced from here. And if you ever reclaim that 886, then yeah, this thing keeps going up. Right? And you've also hit the 87886 of your trend basic extension. So GMX is a nice one, right? Like I said, many things underneath SWI. That was absolutely popping today. What's happened here? You hit the 0.94, you hit the deep Gartley's 886s, and then you popped. Harmonics, this thing's been just harmonic central, honestly. XABCD, right, 786, XABCD, deep Gartley 786, 88, 1.6, deep Gartley 886, 1.618, just absolutely sent again. Right, plus a diagonal to boot. So SWI ecosystem, just I'd say focusing on that would probably be a really good move. There's WAL, right? That one's in a nice area. Deep, this one I'm just not gonna enter here. I'm too worried about a wick out in this one, right? This one is what it is. And of course Cetus, AVAX, ENA is another one, right? We talked about this for the longest time. ENA, you should already be in. If you've been watching my streams, you should already be in with your spot bag anyway. Even if you've not gone all in yet, your initial entries and your size up should already be done, right? Because we hit the, hang on, this is going to be confusing for you guys because there's a lot of levels on, but basically there's been a lot of harmonics in this area, right? And those lows, that low over there, right, where we hit the harmonic, where we hit the old bat 886 and the shark 886 and the current shark 886, macro standard deviation 0.5 Valeria low. Basically these were the areas we were talking about ENA, right? So you should already be on this, and right now what we've done, we flipped the macro point of control into support, right? So above this thing can go parabolic. The only thing this needs to do now is flip this into support. That's it. I'm very curious. Has some, I think it has changed, hasn't it? Yeah. I need to move this, hang on. Oh, not that, delete it. I need to do this. And I also need to do this as the data has now shifted. Perfect. Okay. But yeah, ENA is a really good one. If you wanted to manage your risk on ENA right now, it's very simple. As long as you're holding above the macro point of control, which is currently at 0.3680, you would be in. Okay, if you got below 0.3680, you just cut it. That's it. That's the only way I can see you managing your risk right here. But you've got all these wave structures and the targets for them are higher, right? So ENA is a good one. TON, we've talked about that. XMR, don't even want to. No, this is too late for this one. I was talking about this one a lot back down over here, but this one's at T2 of the target, right? The next stop is literally $629 for XMR if it keeps up like this. Litecoin, same thing, popped off. Say CRV has this one's gone, hasn't it? Yeah. So we talked about CRV. We talked about the accumulative structure, smiley face. We talked about the breakout retest of the falling wedge, right? Accompanied by the M shape. The bullish harmonic, the bullish bat, and the smiley face, that sent us higher, right? So that is CRV. Again, no entry on this one, just looking at which one does and which one doesn't. Link, if you wanted a link entry, it's going to be tight. It's going to be like this. But the reason I don't like giving entries like this is because I hate double bottoms like this, right? There's prime liquidity targets. But if you wanted to trade, you could literally do this for link. Yeah. If you wanted to decrease your chances of getting stopped out, you can increase your stops, but that is now completely up to you, right? As long as you have a 3 RR trade, you're fine. If you want to have a tight trade, you're just going to put your stop somewhere below that wick low. If you want to decrease your chances of getting stopped out, then you want to account for historical price action when placing your stops. So you can see, like, we've had wicks down here before, right? You want to account for that. So it's completely up to you which one you take here. Just size up accordingly according to your risk profile, right? But link is one, a nice area again. This is a M shape, right? M shape hit, and it's on its way up. Link is good. That's a bullish bat. Aave, this one had a lot of harmonics. This one's gone crazy. AKT, this one has this one had a lot of nice harmonics. If you wanted AKT, this is a lower cap play, so please don't put everything you have into it, but I'd do something like this, 20%. This is what I mean, right? Entry down here was so easy, literally so easy. Even though we're not that much off from the highs now, just because of there's so much uncertainty when it comes to, okay, but how low are they gonna take the liquidation, right? So it's just either tight risk management or really wide stop. That's the only two options you have. So and for now I'm just gonna give tight ones, right? I don't care like if you get stopped out. I'd rather you get stopped out early than be holding something like 20% in the red, right? So if you did that, then the first target for AKT would be up over here. Still a 2x from. So spot's easy to manage here, right? Spot's very easy to manage. Fed, add standard deviation 1. No. Yes. At the standard deviation 1 low, I wouldn't enter Fed yet, not until you reclaim this now. Arrow's a good one, but is there an entry on it is the question. Let me see. If I go to focus V2, where did I do this one then? Should have been here. 1 second. Ah, there it is. Okay. Let's do this and harmonics. There we go. That was the what I was seeing on Arrow. You had really nice harmonics here for the wave structure. So right now, 12-month buy seller zones nothing. 6 months one below. If you enter here, it should be very simple. Put your stops below that wick low here. Because if you put it below there, you might as well put it below there, and all of a sudden, yeah, it doesn't make sense. So if you lose that, just cut it, right? It'd be 3 RR trade, even if you don't go to harmonic targets. But if you were to put the targets of the harmonic down, what shall I do it according to? Let's do it according to the more recent one. So A down to D. Your target would be let's say something technical, 382. Yeah, something like that on Arrow perhaps, if you wanted something on Arrow. You've got, oh, that's why, of course, I have 2 charts on this, then yeah. But yeah, the thing still stands as the same, right? Cow, this was on, again, I think this is on Arbitrum. I don't see an entry here right now, to be honest. I wouldn't enter this yet. There's so many like coins at like 886s, right? If I just spacebar some Blur, if you take a look at where Blur is, massive M shape, right? Huge. Shark 1.618, Shark 1.13. You literally bottomed out at that area for now, right? So Blur is super easy to manage actually. I'll just do this. No, let me just, yeah, that's your exchange listing low. I'll just do this for Blur. 13% stops, a bit wider. But you know, if this does end up being the low for Blur, you know, even if you just go by, I'm not even going to put technical targets on because God knows how high this is going to go. But for now, let's keep it simple. Let's just go to the next obvious SR level, right? It's still going to be 188% pump, right? That's one. Chili's, another one, right? If you take a look at where Chili's is, macro 1.13 has been hit. You have lower low in price, higher low in RSI. You have weekly bullish divergence. 2 drives of weekly bullish divergence, in fact, right? So Chili's, your Shark 1.13 just above you. You've hit a 1.13 on that extension, right? So if that 1.13, as long as you're above it, if you wanted to enter Chili's, again, you're not going to put much size into these if you get in, okay? Like these are like, you know, forgotten altcoins. I'm just looking at things that have absolutely bottomed out where it's very easy to manage risk. You could just do this, 23% stop loss, something like that, 12%. So 12 or 23 doesn't really matter. You don't have to go all in here. You go in with, let's say, 40 to 50% over here, right? And then what you do is, in this particular case, you would wait for that to get reclaimed. If the 1.13 was reclaimed, you size up there, fully position, and then you try to run it towards those highs. But Chili's is another one where you can very easily manage your risk, right? Even to something subtle like this. Band. If the range low is ever flipped back into support, I was just space barring with one of my boys the other day. It was like a late night session, and I was just pointing out all the altcoins that look good to him, because he's not very well versed in like extreme harmonics like this, right? So I was thinking I could share all of this on stream. But yeah, band, if you ever reclaim that on band, you've reclaimed range lows, right? Invalidation could not be easier. If you lose range lows, just cut, otherwise you're running into range highs. Even something so simple, right? We're not looking much at all. From here to here can give you 153%, right? And we're not even talking about taking all these highs. That is extremely conservative target. PHB, Another one. You've hit the deep crab. We're not hit it yet, but very close to hitting it. The original 886 of the bat, it's a bit past the 2.618, but I'm putting it down anyway because it's a really nice place, right? But you've had reactions before. So as long as you're above that macro 886, for PHP, you have a very easy way, once again, to manage risk, right? You can do this, you can do this. You can put your stop loss below here, right? And then you can try to run this up towards here if you wanted to, right? You don't have to go to all of these, right? In fact, I would rather you put money into the main projects rather than these other projects we're going over now. These are just some other ones I'm pointing out that are more low cap, more risky, right? But right now it's very easy for you to manage your risk, right? ICP, another one. If you take a look at ICP, I was waiting for this. For the longest of times. This wave structure I've been talking about since literally since that C rate came in with the 1.618 at the start of 2024. Right? It's been more than a year. We finally hit it. The Shark 886 and the 1.618. Right? So this is another one, right? ICP. That looks like a wave structure. 1 second. That is a 786. So 786 means 1.272. Yeah, there you go. How the hell did I miss that? That is another harmonic, right? 786, 1.272. That is a butterfly. Right, we have a butterfly on two parabolic. That's beautiful. ICP looks amazing, right? So easy to manage your risk here. You simply, if you buy spot here, honest to God, I would just say if you ever lose that low, right, 2020 to 12 month low, I would just cut it based on that. If it's spot, just set an amount you're okay with and forget about it. If you lose that, cut it. You don't want to be overly managing your positions here either, right? With spot, you don't want to get chopped off, lose like so much of your port before ultimately price goes your way anyway. So you got to strike that fine balance. But ICP is another one. Right, Zeno, I've got nothing on this. Fuck that. Mudeng. Extension up towards this perhaps. I'll look for a short if this completes and sellers show control. Right, this is still in play. This is a what we call a crab again. 1.618, 3.618. They're all over there. Loon C. Why did I put this here? Must be a good reason. Oh yeah. So Luna Classic, Terra Classic. Speak of the devil. The reason I put this down here is in terms of TA. Very easy to manage risk, right? You lose that low of that red box, you can get rid of this. Otherwise, this one honestly looks good for a range play. Also, we do have. What's wrong with me? That's not a bat. What have I done? Hang on. No, that's not a bat. Never mind. Hang on. That doesn't belong there. But in terms of a range play, that one's very easy to manage. Right? That is the macro 886, it's not the bat 886. So you are at the macro 886. So if I was to do this and this, right? Low to high. There. The 886 is just above you. So should you go and reclaim this in the future, then what's happened every time you've reclaimed this, at a minimum you've gone up towards here and ultimately up towards the 786. So you just got a new range to play with, right? That you can try and capitalize on. Drift, this one looks really nice. 886 again, right? There you go. 886. The trend line being respected. Super easy to manage your position here. If you want to keep a tight stop loss, you just do something like this. If you want to keep, that is something I'll do because below this it gets ridiculously wide. So at this point, a tight stop loss is all you can hope for. I just hope you don't get stopped out. If you get stopped out, either enter when you get the next key area or when you reclaim the level, right? That's it. Just because you get stopped out of trade doesn't mean you stop looking at that, right? Because if you get stopped out but your thesis is still valid, just re-enter. But there's drift. Even again, just back down towards this cluster. That's a 119% move. Morpho, another one. 886 has been hit. Last lower high, that led to the low has been taken out. And we could be in the process of putting a higher low in. I would love one more drop on this to the actual 618. But it doesn't mean it has to come in, right? But Morpho is another one. Right? So all of these are now coins that aren't high caps that you can still look. FWOG, this is another one. You have ABCD 2.24, right? You just have a load of ABCDs after the insane run up, you've come all the way back down. FWOG is another one. How would you enter here? Honestly, to be honest, it's probably better if you wait for a flip of 0.09 to enter, right? At this stage, you can see why clearly. So yeah, just wait for a flip of that to enter, because if you enter here, it's how much? It's not really, is it worth it? 20% versus your stop loss is going to be at a minimum. Yeah, it's not worth it entering here. So I'd wait for a flip of 0.09357 into support. When that happens, I'd enter there. But FWOG, just keep you on a radar. It's a good one. GFI, Coinbase project, right? Macro 886 has been hit. 2.618, 886, huge M shape. Beautiful structure, right? So as long as you're below the actual PRZ, you're not going to get in, of course. But once you get above the PRZ, flip it comfortably into support, you're going to get in. BSV, okay? Who remembers this shitcoin? I forgot what it stands for. Is it, what does BSV even stand for? Is it, well, I don't know. Bitcoin SV. But yeah, M shape, right? 886 at the range lows. I'm not, look, I don't even know what the project is. I'm not entering this. Clearly I'm not entering this because I believe in it. I'm entering because I believe in TA, and TA is telling me right now, if you wanted to enter, you're at range lows, right? From 2018, right? You've completed an M shape with very near enough perfect harmonics, and you put in what we call a cumulative structure. There's your initial support, radar liquidity, reconfirmation, and support. It couldn't be easier. Couldn't be easier, right? To enter BSV right now. So there's that. There's another one called Blub. This is a I like this one because of the ABCD here. Oh, sorry, the butterfly 2.24, 1.414. Beautiful structure. But again, this one is going to be a bit harder to enter on simply because it's a shit coin, right? So you can see even from that to that, it's a 40. I'm not going to tell you guys to enter this. It's a, you gamble on this, right? This is a gamble. If you get in, you get in because you think you can make some money on a shit coin. Otherwise, don't get in if you're trying to trade seriously on this. But yeah, there's a shit ton of projects just there. They literally took me like, 15-20 minutes of space barring to find all these. I'm sure there's so much more. But you can see why I stick with the same projects every time I stream mainly. Right? Because now you're going to be feeling that FOMO. You're going to be like, oh, what do I enter on? Do I enter this? You're going to be very tempted to be like, I'm going to put a little bit of here, a little bit of here. Don't do that. Choose a few you like. Majority of your choices shouldn't be from here, but from the other ones we talked about, right? The main ones. And then maybe choose a few from here for more of like a low cap punt, right? But there's hopefully you've seen there's so many entries to be had. Right, there's a lot. So let me go back over here. Let's see. I'll look at WLD for you guys, and then I'll end the stream there. I've not looked at that in a while. Same harmonics we were looking at all those while ago. So it's still a shark. You're trying to reclaim. Let's go to the macro weekly bullish divs. You don't have weekly bullish divergence, sadly. You do, however, no. Okay, what about the 3-day then? You did have 3-day bullish divergence there. Let's take a look. Do we have anything else going on here? This chart needs an upgrade. So that got taken out. Let's turn that off for now. Don't need that. Don't need that. Don't need that. This one is on the weekly. Fib retracement. Turn that off. Useful but not needed right now. So 886, right? This can be 1.618 to 2.24. This has been. It's still a shark. I'm gonna pin it to the actual ratios. However, did we have any ABCDs in the area? That's the next thing to look at. High, low, lower, high. Not even a 382, so that is atrocious. But perhaps on the daily we did. Yeah, we would have had it. So from here to here. But you haven't even hit the 2.24 by the looks of things. I mean, close, but no cigar. You front ran the 2.24. So I'll turn this off for now. Did we have any extensions over here? So we had 786, 1.414 definitely hit. 1.414 would have been right over there. You reclaim that back into support, as you can see on the right, yeah. The other thing is going to be did we have a 1.618? No, we did not. Okay, so that's not valid. We have a weekly buyer zone, right? Or rather, let me do this current cycle. There's your weekly buy zone. Yeah, so if you want to entry on WLD, maybe wait to the actually not the weekly, do it based off the 3-day. If the 3-day closes above, the daily slash 3-day closes above 1.396, then you can enter. And how you're going to cut your position, you're going to cut your position if you're going spot, I'll just cut it if you ever lose this, right? That's about, actually no, put it below that wick on the left. Basically a 31% stop loss, right? So you're not going to go all in here, you're going to have a DCA or size up one. But yeah, I mean, I could see it. You're trying to reclaim the 886. Yeah, why not? I'm thinking maybe we could get a delayed gaming project pump once GTA 6 actually comes out. If they do something blockchain related when GTA 6 comes out, that's gonna send gaming coins into an absolute frenzy. But yeah, WLD. Yeah, that's it. There's not much to be had here because you don't have weekly bullish dips, right? I would love to see weekly bullish divergence, but it's not there. Neither in the RSI nor the MACD. So, but yeah, that's WLD. Okay, guys. So that's gonna be it from me today. Hopefully you guys enjoyed this session. If anyone's interested in learning the way I trade, I have a couple spots left open in my one-on-one. Once those fill, I'm closing it all out. So just reach out to me. Otherwise, whenever our next stream, I'll catch you guys there. Yeah? I'll put this on YouTube as well. So I'll stop this recording here, and I'll talk to you guys